Hey, what's up, everybody? This is Evan Carthy from evancarthy.com. We're going to look at what we're expecting to happen next week to kick it off for the E-minis, which are the S&P 500, Russell 2000, the Dow Jones, and the Nasdaq futures. So what I look for is when I trade, a little background here real quick, is I use the previous day's highs and lows to trade off of going into the next day. So this would be Thursday right here that we're looking for. So I would have put my low at the very low, or my anchor point at the very low from Thursday, and then just keep on dragging it up until price comes down and hits the 50% level. Get long there. Exit is just below the 38% line. So good little scalping trade right there. Because one thing for some reasons in the future market, when you use the previous day or even the current day, using the highs and lows for it, you can pretty much almost every single time there's some type of reaction down here at the 50% level. And sometimes it definitely does come down lower, but it pretty much always comes back up and hits the 38% line right there. And so that's one of the trades I do utilize for it. So as you can see, that's just one example of the reason why I do that. And then even from there, it was obviously it was a retracement trade, came up and hit the target. Now, another thing I do look for, this isn't one thing I've figured out how to make this trade work, but if you use a day's high and low right here, so there is the Thursday low right here. Here's the high right there. So what's going to happen from there is eventually one of these two 1.618 Fibonacci extension levels, the yellow lines right here, are going to get hit either to the upside or to the downside. They eventually will. I just haven't figured out how to create a filter for it to where it works more than 50% of the time, assuming I'm getting over a 2-to-1 risk-reward ratio for it. But as you can see from Thursday right here, look at that price. Ended up Friday at about 2:35 p.m. going up there and hitting that 1.618 level. I believe there were some, and then like look at this one down here. So sometimes it can take days or even weeks for it to hit, but it will eventually go up there and hit it. So using that low and high from it right there, it took a couple days. Let's see, that would be Friday, Thursday, Wednesday, Tuesday, Monday. So that's for Monday right there. Took the full week, but eventually came up there and completed at the 1.618 level right there. So using that standard for it, a couple of target levels we can also look for moving into next week from this setup right here. Using the low from Friday to the high of Friday is we are looking for an upside target of at least 41.4650, but if that fails to get hit, then the downside target we'd be looking for is 40.56. But using this low and then using the high, we're looking for eventually, we are looking for a pullback to this area right here. And then the way I trade, I would be getting that long I would look at getting long right there, and you can use it from either direction, especially from the previous day or even the current day, because in Friday's trade, looking at the high right here, Thursday's trade, looking at the high right here, and you see you can just keep on dragging it down. There it hit the 50%, came down, hit the 38. Now, in a perfect world, you take that trade right there and you hold it all the way down to right there. I just look for the little scalp when I do it. This one I did take because this is at 5:30 in the morning, and I'm still asleep at that point. And then just keep on bringing it down until it hits the 50% again. As you can see, it hit it right there, took it back down, and then obviously never creating new lows after that, so there weren't any more shorts for that day. But that's that for the S&P 500. Now for the Russell 2000, this one is going to have a couple of targets we're looking for here going into next week. The first one from Thursday's levels, which still haven't reached the high of 2271.6 or the low of 2181.9. Right now it's just battling it out, but look, it's getting support here at the 50% level. So if this is going to be a continuation for it, this is the target you're looking for up here, 2271.6 from Thursday's levels. And then there'll also be some more levels over here from Wednesday's levels as well, 2296 and then 2171.7. So it's just kind of been seesawing back and forth until the market decides what the Russell 2000 wants to do. Then from Friday's highs and lows right here, we have a potential target to the downside, 2208.1, an upside of 2270.3. Moving into next week for this potential 50% trade, it's already been hit, as you can see right here. Came down and did it. So what we would be looking for is new highs and lows. So if we get a low below 2250.3, we'd start dragging this down. If price comes up above this high right here, 2253.1, then we keep on dragging this up there, looking for the high and look for the retracement down to the 50%. So that's that for the Russell 2000. Looking for the market to break out either direction. Then here for the Dow Jones, you can see here late Friday, the target from Thursday went and got fulfilled. There it is, late Thursday, came up there and hit that really strong way to finish the day right there. You can see price came down here, barely hit the 38% from the daily high and low from Thursday, and then Friday came up, completed it right there. So moving into next week, based off of this movement over here from the highs and lows from Friday, we'll be looking at a potential high target of 33,893, and if the market collapses or goes down, we'd be looking at a potential target down here of 33,173 for that. But for more prices right there, we are waiting for a pullback down to the 50% to get long there, and the exit just below the 38% from that, assuming that remains the high from it. If it continues to make new highs without coming down and hit the 50%, we just keep on dragging this up a little bit more from that. So those are the levels for the Dow Jones and the potential trades, kind of similar to the S&P 500. You also have one, if you wanted to, using the high from Friday there to where it finished up, using that 50% down to 38, but that's not enough for me to get in there for it, and it's definitely going against the momentum, the way the market's moving right now. So that isn't a trade I would be looking at taking, but is valid, is a potential, but it's just too risky for my liking. Last but not least, the Nasdaq. The Nasdaq actually has a couple different ways it could go. You can see from Thursday's highs and lows. Price never came and hit the 1.618, so wouldn't be surprised when it kicks off next week to go up there and hit it at 13,898. But if it doesn't, and then the low would be looking for down here is 1350.5. And let me just show you as an example down here. Look at this one right here, all the way to using that low to that high right there. You can see on Friday, price come up there and hit that 1.618 to finish that that target we're looking for from, was that Friday, Thursday, Wednesday, Tuesday, Mondays. That highs and lows came up completed right there Friday. Use it as a double top, so we'll see if he'll continue up and hit the next high that we're looking for based upon Thursday, plus also the high from Friday, using that high in that low for it. The target 13,960 to the upside, or the low 13,529.50 down there. So if price continues to move up, creates a new high up there, then we would just keep moving this back up, waiting for the retracement down to the 50%. But if the price keeps that same high, or it doesn't break this high right there, goes on down to the low, then we just drag it down, flip it the other way, and drag it down. But if price does come up there and make a new high, then that would create the potential for when price come back down the other way to look for a, let me show you real quick. So say it comes up there, makes a new high right there. We'd be looking for price to, we'll just assume that's the high right there. We'd be looking for price to come back down, hit the 50% level, and looking to get in long right there. But I need a bigger move to the upside for me to get in. So that's basically it right there. I just look for the pullback to the 50% based upon either the daily range or the previous day's range. I don't go back even more than the previous day, because from there, a lot of the times, a lot of the contracts that have already been fulfilled there are out of it, so it can be just some false entries that do not work. But using the previous day, seems to be a really good way of doing it, as well as the current day. So on days like this, or let me go back to the S&P 500, on days like that when you're getting a lot of movement, both ways, range days, it works out extremely well. And then on days when it's clearly there's a, let's see here, like there's a day like this, one's clearly going on to the upside. You don't want to be, you only want to be, or I only want to be looking to go long to it. So anyways, that's that. That's what we're looking for here next week for the S&P 500, Russell 2000, Dow Jones, and the Nasdaq. Have a good one. Thanks.